And let me start, Rebecca, with the havens question from our MLive team. They're asking essentially which havens are the most attractive. You know, if investors decide the tension is too much, they don't want the stress over the holidays, they saw what happened last December, are they going to go, do you think, the most into yen, into gold, into treasuries? Do you have some other strategy?
If I may, I'm going to go sectors, because we're in a world where macro, politics, economics has become so important over the last decade. That's not going away, so play it more selectively, play it via sectors. I would say two places really appeal there. One is real estate. Real estate has worked all year. You've got some defensiveness there. You've also got strategic growth in terms of residential building. And I'd also say go healthcare. European healthcare has worked all year in terms of really strong defensive earnings growth, no downgrades. And then US healthcare. It does have the risk of the US presidential election hanging over it, but that is now baked into the price.
Let me ask you about financials then, as we're talking about sectors then, Rebecca. We've got a chart here that shows the rebound that we've seen in the 2s-10s spread, so the yield curve steepening in the United States, and a bit of a bounce back in backstocks. This is US financials. Does this appeal to you? And if so, is it all about the yield play, or is it something else?
Yeah, so US financials has been one of our favoured sectors to talk to investors about this quarter. Banks is where it's at in this sector, and what it means, it's the height of the yield curve and the steepness of the yield curve. They're both playing into banks' hands now. Margins are strengthening, but more so, even if that weren't happening, you've got a much stronger set of companies. 10 years ago, they had a shock of a lifetime, the global financial crisis, and they've really recapitalised themselves, restructured the companies, and they're now much stronger beasts than they were before.
What do you think about investor fears over the holiday season? I mean, are they overblown? Do you think it might be a good idea to take a month off just in case we have a replay of the end of 2018?
Well, actually, as Anna started the programme by saying, actually, you're betting against history then, because equities have consistently risen in December. I think it plays to be cautious, and it plays to be selective. You've got to look for earnings growth. If you're not looking for earnings growth, you've got to look for value now.
You've got to look for value, but is it the right time for value in general? Is that going to be the strategy? Because people have been dipping their toe into whether it is the time for value to make a comeback for the last few months or so, and yet we still speak to investors who say it's not quite time yet.
So it's definitely the right question to be asking. We haven't got the strength of economic growth or the inflation to make it a huge trend now, but I would suggest if you're underweight value, you want to change that short. You want to close that short, because essentially value usually rises as interest rates are going up and as oil and commodities look more interesting, and therefore it's a risk not to be at least up to weight in value at the moment.
And what do you think of the energy sector? You like that energy sector?
Yeah, so this is a new thing coming to us now. This is a sector that just hasn't performed this year. There's a 34% difference between what they've done and what US technology has done. So that shows you the power of investing in sectors. And essentially in energy, you've got an underweight institutional investor. They're starting to buy. That means there's huge momentum if that unwinds. You've got value stocks. You've got an oil price that could go up post the OPEC Plus meeting that starts tomorrow. And then you've got the pricing of Saudi Aramco also tomorrow, which means that energy will be in the spotlight. So I think that's an interesting place.